Hi, everybody, and happy Monday. It's your friend Ryan Rolfe with the Dsmsold team at Keller Williams Legacy Group here in Des Moines in central Iowa. And it's Monday. Once again, it's time for Monday Market Update. We are officially into September, not quite to the fall season yet, although it's starting to feel like fall. So since Labor Day is over, school's back in session, state fair is over, we're kind of in that fall uptick or fall second wind is what I like to call it. We tend to see a little bit of amplified activity September, October, early November. A lot of that, of course, depends on weather, interest rates, and what's going on in the economy around us. So, with rates where they're at right now, that is making it potentially a little bit more attractive for buyers. Rates are easing, and nationally, the rate that we're seeing is 6.5%. But locally, we tend to have rates that are lower than what we see nationally, which is great for folks in the central Iowa region. So our rates are hovering locally around 6 to 6.5%, with government-backed loans dipping under 6%. We've certainly seen some of our credit union and bank lending partners. They are showing rates in the high fives. Of course, that's all dependent on credit score and a lot of different factors, and yet there certainly are some options there. And then FHA, VA, USDA, those rates are tending to trend down as well to be in the high fives, low sixes. So certainly gives you a little bit more buying power, or maybe lowers your payment if you're not looking to go up in price, which certainly, if you find the right home and it's at the price that you were expecting to pay, guess what? Your payment may be a little bit lower because that interest rate has come down. So certainly don't feel like you need to up your price point just because rates have come down, because who knows how long they may stay where they are or potentially continue to decrease. So time will tell on that. If we follow last year's trajectory, we will probably see rates continue to come down potentially into September, and last year, early October is when they kind of started to go back up to the 6.5 to 7 range. So we'll see what happens. There's talks that the Federal Reserve may lower their benchmark rate. Well, that's not directly tied to mortgage-backed securities, which is how mortgage rates are set. It does have an effect on them based on speculation before and after. So with that speculation of a potential rate cut with the Fed now, that's why we're seeing slightly lower interest rates. At least that's part of it. And then we may see them tick back up potentially as that actually takes place, if we do have a rate cut at the Fed level. And that may be temporary, or that may be, that may get us back into kind of what we had seen last year post beginning of October. So we'll see what happens there. It's anybody's call. Overall, inventory in central Iowa is above 4,200, so 4,200 homes available throughout the metro area, all price points, all conditions. That's giving buyers more options. Rates easing as well certainly is making things potentially a little bit more attractive for buyers and for sellers. Certainly being able to showcase, where rates are currently. So that's one of the things we as your agents can do as your partner, is get our local lenders that we work with to provide rate sheets and different things to be able to share out with the public on, hey, look at what's happening in the market, look at what the affordability has changed for this particular property. Market-wide, we are in a seller's market still from $100,000 to $400,000 price point. So that means there's less than 4 months of inventory. So slightly favoring sellers over buyers. We're getting closer to that 4% mark, and yet 4 months or more mark, and yet we're still below it. So doesn't mean you're going to see a ton of multiple offers. Certainly there are still a few here and there. We've definitely experienced that, and yet with more options available, those homes, really all that means is those homes may move quicker than homes at a higher price point that are potentially an even market or a buyer's market. We've seen with our listings that are in that 400 and under price range, if we price them appropriately, get the home ready, what we like to call it is, we want your home to look like an Airbnb, right? So we do photos, staging, all of those things to make sure that your home stands out, and then it's presented and marketed appropriately online. And that's usually getting us within 2 to 3 weeks. We're getting an accepted offer, which is pretty standard. That's pretty standard for our days on market, around 20-ish on average. and the $400,000 to $700,000 price point. So if you're in those price ranges, again, this is the entire metro. So different cities or communities or neighborhoods. If we did that more hyper locally, these numbers may be different. So this is really just metro wide. 400 to 700,000 is what we would call an even market, which favors both buyers and sellers. So it's kind of a level playing field. And then 700,000 and above is in a buyer's market. So it's certainly favoring buyers over sellers. Of course, new construction is still in a buyer's market. So if you're looking at a new construction price point, you may have the option to get some additional incentives and ask for things that maybe you couldn't have done in previous years when new construction was selling much more quickly. A lot of that is just because there is a lot of inventory that's been sitting, and so builders are trying to get those properties sold and ideally wanting to keep them at the price point that they're at, so they're offering additional incentives in different ways. So be sure that you're asking about those if you are looking at new construction, what incentive options they're offering, if anything. And then overall, as we go deeper into the fall season, the weather will certainly impact what happens with the market. You know, if it gets colder quicker, we may see that our fall kind of second wind doesn't bounce, or, you know, that second wind doesn't go up like it has in previous years. So this weekend, we saw 203 new listings come on the market. 106 homes went into pending or under contract status, and 116 homes sold and closed. So if you look at the new versus pending, there is a decent gap. We also saw that in the 7 days. So that's part of what's allowing our inventory to grow. However, overall, we're seeing that really the last month or two, new listings and pendings are pretty much hand in hand. So, you know, we have a little over 1,100 new listings, 1050s, slightly above that is what's gone pending. So the market is healthy, which is great news if you are looking to buy or sell. And of course, as always, if you've got questions about what any of this means for you, if you want us to go hyper local for your neighborhood, feel free to reach out. Always here to assist in any way that we can. Hope you enjoyed today's episode. Thanks everybody for watching, and make it a great week. Bye.